Hi, and welcome to Leaders in Lending. I'm your host, Jeff Keltner, and I am joined this week by Rob Nichols from the American Bankers Association. Rob, thanks so much for joining us. I really appreciate it.
Jeff, happy to be here. Thanks for inviting me.
Absolutely. So, I imagine most of our listeners are relatively familiar with the ABA, but just in case, can you give us a little bit about the organization, kind of how you fit in the banking world and what your role is?
Sure. Well, Jeff, there's about 5,000 banks in the U.S., as you and your listeners
Hmm.
know, and we are the voice of all of them. We're the only, there's a number of national trade group representing banks, but we're the only one that represents essentially every bank in the United States
Yeah.
versus just the small ones or just the large ones. So we do a lot of advocacy for common sense banking policy. And then we also help our members from a business and operational side, and we do a lot of
Hmm.
training and education and offer other resources. So, kind of one-stop shopping for the nation's banks. Have about 350 employees, and are headquartered just a couple of blocks from the White House.
Nice. And I've been to your offices in DC, and I think we actually use some of your training here at Upstart. So I've been through a few American banker trainings on various regulatory topics, which have been very
Oh, that's
useful. So
great.
thank you for that. Um, I know you're in DC, and we've got a lot of things going on. And I'm curious what you're got your eye out for potential policy changes. As you know, we've got the new administration, not that new, I guess, anymore, but still, not all the regulatory folks in place. But I think people expect a shift in mentality. What do you have your eye on? What do you see kind of coming down the pipe from a regulatory point of view from this administration that you're watching?
Sure. We'll start big picture, and then I'll kind of zero in a little bit. So, the incoming or the new president, Biden,
Hmm.
has announced kind of four priorities. My words, not his: fixing COVID,
Hmm.
addressing the economic dislocation, handling racial inequities, and dealing with climate change. So clearly, on the economic growth and the economic recovery platform, there's a
Hmm.
lot that we can do with the Biden administration. A lot of alignment. I think increasing access to credit and helping the economic dislocation, those facing a tough mortgage situation or a small business situation, that's where we have a ton of alignment with the incoming administration, with Janet Yellen at Treasury, for example. And you're right, on the regulatory side, we don't. We're going to have two new regulatory leaders at the OCC and the CFPB. We'll
That's
have
right.
static leadership at the FDIC and the Fed. So we're going to have some new folks that we're going to work with, and then there'll be some static folks. On the OCC, for example, Rohit Chopra hasn't been confirmed yet. He will be soon. So it'll be interesting to see the direction he takes the bureau. We have some hints based on
Hmm.
his confirmation hearing a few weeks ago. Mike Sue, who's going to be the acting comptroller at the OCC, I just spent some time with Mike the other day. And I think he'll be in that capacity for a number of months, if I had to guess. But I'll tell you, the key area of alignment with both the regulatory community, with the congressional community, and certainly the administration is just about helping spur an economic recovery.
Yeah.
And what's great is all of those stakeholders realize that they need a fully efficient and effective functioning banking system to do that. So it's in our interest to demonstrate that we want to be part of the recovery story, and they know that we need to be part of the recovery story. So unlike the financial crisis of 10 years ago, we're not the bad guys. We're viewed right now as kind of the solution and not part of the problem.
What do you think the key parts of that solution are for that the banking sector can offer? Because I think it's a great point that we are really looking at a recovery from a unprecedented and very unique moment and stress period in our history. How do you think about what it is that the banking sector is really adding for value and providing in terms of assisting in that recovery process?
Yeah, two things jump to mind, obviously, and that's one on the housing front.
Mm.
Obviously, you have a lot of people facing foreclosure challenges. So even apart from all of the government programs that were announced and implemented and rolled out last year, banks were in advance of those working with their homeowners to keep people in their homes.
Hmm.
No one wants to foreclose on a home. It's not good for the overall economy. It's not good for banks. It's not good for the family. So
Yeah.
I think just on the housing front, there's a lot that the sector can do to be helpful. And then on the small business front, the same thing. Obviously, the small business community is such a huge part of the overall economy, as you well know. And even pre-CARES Act and before the PPP, banks were proactively working with their small business borrowers to say, hey, what can we do to help keep this business
Mm.
afloat? So those are just two examples. But again, there's plenty to be done, certainly.
Yeah.
But those are just two examples. And then on the, obviously there's a lot just from resiliency standpoint, we need to do, cyber, as you well know, cyber threats are huge.
Yeah.
Banks have great defenses, arguably better than any other sector in the economy, but we have to remain vigilant. So I think there's, on the security of the banking system, there'll be work to do there for sure.
Yeah, there's always more to do on that front. It's a bit of an arms race, I think, with the bad guys, but does feel like the banking sector is in good shape. And the kind of working with the government through PPP, do you view that as a model moving forward? I mean, it seemed like a great example of a government program, industry execution in partnership that really was quite effective in achieving its objectives. And how do you think about that? It's a little different than some other government stimulus programs where you end up just, kind of bypassing the private sector. Do you see that as a model moving forward for other kinds of economic disruptions? Because it seemed to be a pretty effective actual program and utilization of the market to drive some of that execution of that program.
Yeah, so that's a great question. So despite the rockiness of the launch of the PPP program, which was awfully chaotic, it was arguably to your point, it was arguably the most effective part of the CARES Act by a mile. By some estimates, as 50 million jobs were supported, by others, almost 100 million jobs. I mean, huge amounts of economic support for the small business women and men of our country. I do think it is a good model, again, despite the rocky, chaotic launch and the lack of guidance that sometimes took weeks or months to come. The fact that the government realized we need to have the nation's 5,000 banks really be the key, the front lines, the economic first responders for these programs. We can't do it ourselves. They need to be on the front lines of these lending and liquidity facilities. And the SBA stretched in a way, of course, they never had. Normally they do in a year 40 billion of lending. We asked them to do 800 billion. So were there glitches? Sure. But it's basically the banks, of the 5,000 banks in the U.S., roughly 4,000 of them, really, 8 and 10 were the ones dispersing all of that grant money to the small business women and men in their community. So yeah, it was a heroic effort on the part of the government and on the banks and on the small business community.
Yeah, it's been remarkable to me to see how that's all played out, particularly as we've seen less disruption in many ways on at least the lending side and defaults and things than many anticipated. We've been kind of pleasantly surprised by the stability in many ways. And I think there's a lot of credit to to your point, despite a rocky start, which anything you're trying to execute quickly, like I'm in the tech world, we launch stuff real fast and, usually comes with a few bumps along the road, but I think we ended up in a good place. So let me ask you this. I know you think a lot about the financial health of the consumers in the U.S. overall. How have you seen that? Let's take that lens on. We talked about the small business and PPP and supporting those folks, but how do you think COVID in the last year or so has really impacted the financial situation, the financial health overall of the average U.S. consumer? What do they look like? What does that world look like right now in your mind?
It's definitely improving. So putting aside the PPP, which we've discussed, the economic impact payments were huge, absolutely huge by every measure. Banks helped deliver roughly 300 million EIP payments, roughly 300 million. That's remarkable. And a Fed survey found that about a third of the people use that money to pay down debt. Another third use the money to save it, which are both, of course, two indicators of health. So there's no doubt that those banks played an incredibly important role there. And the economy is returning and restoring its strength. We had just literally last week, Jeff, our Economic Advisory Committee, which is made up of the chief economists of the nation's largest 18 or so banks, and they meet every couple of months or so. And they see growth this year, inflation-adjusted growth at around 7%, which is, those are like China-like growth numbers, but ours are real. And I was really encouraged to see that. And that with that economic growth, a lot of positive things will happen, certainly.
Yeah, I wanted to take a minute here too and ask you about, I heard mentioned something called the Bank On initiative that I think you've been quite involved in and kind of improving making sure we have access to financial services for the community. Could you, I've read a little bit, but I'd love for you to kind of explain for the audience what that initiative is and how you think about its importance.
It's so important. So Bank On, having a Bank On certified account, there's a nonprofit organization called the Cities for Financial Empowerment Fund, also called the CFE Fund, which is the group that certifies Bank On accounts. And these accounts, allow for they have transaction capabilities. They're kind of no nonsense, no frills accounts. There's no overdraft fees, and what they're designed to do is to bring into the banking system the 7 or so million women and men who are unbanked or
Yep.
underbanked. And of course, to get a leg up in our economy, you need a lot of things, but certainly among those things is you need a bank account. You got to be
Yep.
part of the system. So what this is designed is to bring those 7 million unbanked Americans into the banking system with an account that this third-party nonprofit group, the CFE Fund, has certified. And it's great. We have banks all across the country that are offering these. We're about a year into this campaign to encourage banks to consider offering one of these bank-on certified accounts. And it's great. The numbers, the FDIC just a week or so ago came out with the latest numbers, and the percentage of unbanked Americans is falling. So, but there's still too many, and we got to bring them into the system. And it's for, it's certainly obviously once you get into a banking relationship, that's the first step to financial security. And there's just too many. You might have to go to, one of these other areas where you're paying, crazy interest rates and all that sort of thing. So we're trying to eliminate all that, bring these 7 million people in.
I love it. One of the things that got Upstart into the financial space was the idea of expanding access on the lending side. And I think I never appreciated not being in the financial services space earlier, how many people are left out of the banking, so not just the access to credit, but access to just banking products at the checking account level. And I think it's so critical. So for those listeners who don't have bank on initiatives, something to think about, because I think it's a really worthwhile initiative. And it is the first step to bringing people into the broader financial services ecosystem. You have to kind of start here.
Exactly. And again, the number is declining. It's diminishing. That's great. It's still way too many. And it's really hard for these people to get a financial leg up if they don't have a bank account. So this is kind of an entry-level bank account, low fees, no overdraft. I mean, it's exactly where you want to be to have your first account if you don't have a bank account today.
Yeah, perfect. So when you talk to your members, I mean, you said all 5,000 banks are kind of who you represent. What are you seeing as the key strategic priorities from the consumer banking point of view? I mean, where do you see people focus? What are the kind of trends that you're hearing about in terms of where people are putting their time, energy, budget, attention in terms of improving those offerings?
Yeah, and so it's really all about the user experience right now. Obviously, the rapid convergence of banking and technology has been upon us, so that's not new.
Yep.
But we want to meet customers where they want to be, and so that's the huge trend. Again, the trend was underway pre-COVID. COVID has hastened and accelerated it. And then the second half of that, though, the critical question for banks, in addition to meeting customers where they want to be, is that how do you maintain that relationship as you move into more digital channels, and you're not having as much of the human interaction. So that's the rub. That's literally it. We're more technology, more mobile digital channels, but at the same time, banking is a relationship business. So we think we can do both, but that's kind of top of mind for us.
Have you heard any kind of best practices or approaches? Because this is a topic when I talk to my guests that I hear a lot is like, how do I meld the in-person high touch experience that we want in certain instances with the digital no touch experience I want in others? How do we think about kind of those two things living together and complementing one another? Do you have any advice for folks or things you've seen that have worked really well in terms of how banks are tackling that question of how these two things live side by side and maybe not just compete for how people interact with the bank, but actually complement each other?
Yeah, so there's no monolithic answer. So, for example, some of our nation's largest banks, JPM and others, have really good data scientists, and they're able to kind of solve that riddle on their own. But then some of our nation's smaller banks are looking to partner with fintech companies and companies like yours who say, hey, we can help you enhance the customer experience and create a win-win-win. Win for us, win for the bank, win for the customer. So I'd love to say there's one monolithic answer to the question. There is not. It really depends on the type of bank, the size of the bank, and what your particular business and digital strategy is. But that's the challenge that all the banks are facing. I mean, everyone realizes there's wonderful things that technology can enhance from a banking standpoint, from a regulatory standpoint, an AML standpoint. Those are all good things. admittedly. But at the same time, you just don't want to lose the bespoke human touch that has been traditionally associated with and makes banking such a premier industry.
Yeah, absolutely. What do you think about? I mean, you talked about some of the banks looking for fintech partnerships. We've certainly seen that. Are you seeing the capability in that space increase? Or I feel like one of the things I see from banks is a not always a clear answer for how they think about oversight, how they think about due diligence, how they actually engage in a partnership. And they're kind of challenged to do that with the fintechs because they don't really know how to do it, if you will. It's like it's a first time at the dance and they're going, I don't quite know what to do. Are you seeing that shift and more clarity from banks and any advice for them or for the fintechs on how you kind of ease the ability to work together? Because I think there's a lot of opportunity there, but also a lot of uncertainty about how to make it work and who has what responsibilities and how you really execute and provide value in that context.
So great question, and I've got an answer for you. So two-part
I love
answer.
it.
Part one is in the 5.5 years I've been the CEO of the ABA, I've noticed a
Mm,
huge shift in the rhetoric, both from the banking sector and the fintech
mm,
community. So back in 2016, when I started, a lot of the rhetoric was the fintechs are going to disrupt the entire banking sector, and
yep.
banks were at times pretty defensive in some cases around the fintech sector. That's totally changed. You know what it is now? Now it's all about partnerships and enhancing the customer experience. So to your question, again, some of our nation's largest banks, the
Yep.
GSIBs and others, do not need a lot of hand holding in this area. They have incredibly thoughtful, sophisticated teams. But you got 4,900 other banks. And what we do, actually, Jeff, when you asked about the ABA at the very beginning,
Hmm.
everyone associates us with our federal advocacy from a
Yep.
regulatory legislative standpoint. And yes, we have a huge team of 100 people who do that. But we also have a huge team that does due diligence on fintech companies and finds the best fintech companies to partner with banks.
Yep.
So we have squads of people who are talking to every fintech company with eardrums to say, hey, are you interested in partnering with banks? Then we want to talk to you because we are always on the hunt for ways to improve the banking sector. So we're not just surviving, we are thriving. We're meeting customers where they are. So we have tons of fintech companies that we work with to create marriages with banks.
Mm,
Again, not the GSIB, they can do it on their own. But once you get down that asset ladder just a little bit,
yeah.
there are thousands of banks who will call us up and say, hey, Rob, I've heard there's this new small business lending algorithms to help us close these loans, and half the time there's 50 companies in the space. How do I sort through them? And we say, aha, we've got a team that does that. So it is complex, to your point.
Yeah.
There's a huge marketplace out there. It's a huge marketplace. And if you're a community bank or a mid-sized bank CEO, it's hard to know exactly where your technology spend should go. It's hard to know that. That's where the ABA comes in. We have squads of people who help banks on any part of the technology experience find the right marriage
Hmm.
with a fintech company. And so to the fintech companies listening, so the banks know this now. They've heard me say this repeatedly for the last 5, 6 years. But for the fintech executives listening, please give us a call. If you have an offering that you think banks would be interested in,
Mm,
we're interested in talking to you. And we have a big team of people who, for you to liaise and meet and engage with,
hmm.
who would love to learn about your particular offering or your service or your piece of technology.
I like that advice, and I certainly think the consolidation to some extent of, having gone through many bank partnership conversations now, you get asked a lot of the same questions, and having a place that you can kind of have a trusted third party who's helping dig into the details and providing some of the insight, particularly for the smaller banks that don't have expertise to oversee. They don't know how to do diligence on a certain kinds of technology because they don't have experts in house, and so I think that playing middleman between the two is really valuable, both for making it easier for the fintechs to engage and for the banks to really meet their advice. It's a great pointer for those and for the fintechs out there. We'll make sure you can find a way to engage with the ABA, but certainly something we've done and has been valuable for us. Um, so I want to shift a little bit, Rob, as we talk about fintech partnerships. Obviously, Upstart's kind of place in the fintech ecosystem is very much centered around AI and the application of AI to financial services, which is not true. There's lots of fintechs that are in that space, but that's a lot about where we're at. And so I'm curious, how do you think about the place AI or machine learning technologies play? Why are they, or are they, I guess, first, and if so, why important to the future of banking? What are the kind of things that banks can expect to get out of engagement with technologies like that. And then I want to talk a little bit after that about how we get there and what we need to do to make that more practical.
Sure. So I think AI is a great, powerful tool, quickly changing how every sector does business. And I think there's a ton of opportunity in our own sector, in the banking and financial sector. I think for us, it can certainly help us understand how help banks better
Mm-hmm.
understand customers and their needs. I think in lending, it could probably help banks identify creditworthy customers in other ways apart from just broadly the FICO
Mm-hmm.
system, particularly maybe for borrowers who couldn't qualify for a
Yeah.
loan. So I think there's a lot of opportunity. I think from a customer relation standpoint too, meeting customers where they are, anticipating their questions, just like
Mm-hmm.
as someone said to me the other day, Jeff, when you go on your Netflix account, based on what you've recently watched, it gives you an opportunity, an offering of, hey, maybe you want to watch
Yep.
this. So I think some of that basic AI tools are probably helpful in banking as well. Again, not supplanting
Yep.
the human interaction piece, but I think there'll be a lot of opportunities for AI, and not just perhaps on the customer facing side, but perhaps also on the regulatory
Mm-hmm.
side, helping with AML, BSA regimes and reporting. Right now, there's tens of millions of pieces of information that banks churn out annually that they give to FinCEN in the form of SARs and
Mm-hmm.
CTRs that we hope, of course, FinCEN and the law enforcement agencies can use to get the bad guys. Bankers are phenomenally patriotic. They're happy to churn out all this data. They just want it to be used efficiently and effectively to find the drug dealer, the money
Yep.
launderer, the terrorist financer. And I think if I had to guess, and I'm a Treasury alumni, I spent 5 years as an assistant U.S. Treasury Secretary, so I can say this, I'm guessing there are probably areas where AI can help the law enforcement
Mm-hmm.
authorities as well. If I had to guess, sort through the tens of millions of pieces of financial data that the 5,000 banks churn out annually. So I think there'll be some customer-facing pieces.
Mm-hmm.
And then I think there's probably some regulatory advantages over time, if I had to guess.
Yeah, I'd say the other thing we see is certainly the application of not just to the customer facing, but the internal bank processing, where there's lots of
Mhm.
efficiencies to be gained. I mean, if you think of ML as being a predictions game, there's a lot of predictions being made by banks all the time. Is this a fraudulent transaction? Is this a good loan? So I think there's, a lot of opportunity. One of the questions I hear a lot though is how are regulators going to think about, oversee, what are the expectations for governance? How do I approach that in the context of a model? And I know the regulators have put out a joint statement recognizing the use. There's a RFI out right now from some of the regulators on oversight. Do you have any sense of where you think the Fed, the OCC, CFP, all the various alphabet soup of regulators all have like a little bit of oversight in the space, where they're going and what we can expect on the front from the regulators about how AI can and should be used responsibly within the banking sector?
Yeah, this will be interesting. So it's hard to make a super firm prediction, but I'm glad that they're weighing in here. I think in banking, the different types of activity are regulated, right? So like when a loan is
Mm-hmm.
made, the same rules apply if it's a loan online or in person or generated through AI, for example.
Mm-hmm.
So I'm not from a regulatory standpoint. I don't think the regulators are gonna fundamentally change, how banks are regulated. I think they will account for AI, but I think they'll account for it perhaps in a similar way than they do,
Mm-hmm.
when they look at other activities. We'll see, but it will be interesting to see, how they weigh in. So hard to make a firm prediction, but we do spend a lot of time thinking about it for sure. But my
Yeah.
guess is since the banks are all, pretty heavily regulated, I'm guessing that the introduction of AI was probably not going to dramatically change the regulations, but we'll see.
Yeah, I mean, certainly what we've seen is there are many of the regulations that seem to apply pretty straightforward. Fair lending is a great example where
Yeah.
maybe it's a slightly different approach, but the regulations aren't out of date. I do think the place we see the biggest opportunity is consistency and guidance on things like oversight or model governance, where
Yeah.
those are things that are not always consistent or well understood at the individual examiner regulator level, and where there's some opportunity. In that vein, what do you think? I'd love your advice for us or for our banking clients as we think about engagement with regulators and kind of paving the road, if you will, for the adoption of these technologies overall. What do you think we can do to kind of speed up that transition and assist with the kind of clarity and getting to a point where these are more broadly understood and felt like they're safe to be utilized?
So I'll tell you a big thing we haven't talked about yet, but it's like the 800-pound gorilla in the room is to
Oh,
have
let's talk about it.
all these fintech companies engaging with the three major core providers, because you got to remember, of the 5,000 banks
Mm,
in the U.S., once you cut out the top 100 or so, the other 4,900 of them work primarily with one of three companies: FIS, Fiserv, and Jack Henry. And those
hmm
companies help banks, community and mid-size, and even regional banks deploy, their particular customer-facing offering, whatever it may be. And so much of the innovation and technology adaptation, Jeff, for the banks goes through one of those three companies. There are in total about
hmm
24 cores. So I'm not minimizing the other 21 cores, but those
The
three have
yeah.
roughly 85, 90% of the marketplace. So I'll just use them as an example. But there are 24 in total. So if you work for one of those other core providers and you're saying, hey, Nichols, what about us? I'm saluting you guys as well. But it's those three companies that right now have a huge chunk of the marketplace. And
Mm,
as they move more speedily, more nimbly, and with more agility to introduce these additional customer enhancements, I think there'll be dramatic improvements there.
mm,
And a lot of our members have been frustrated with the pace of innovation deployment and technology deployment, and these companies have grown through M&A in some cases as well, so they can have
hmm
their own technology stack, can have really new technology and also kind of outdated technology. But I will credit them. They're moving the right direction. More needs to be done, but that's a huge
Yep.
piece of this technology deployment chessboard, and that is ensuring that those three companies are engaged with fully from all these fintech companies that want to
Mm.
offer their services. Because again, to get a bank to deploy your product or service, in many cases, that will occur with and through their core provider.
That's interesting. We've done some direct regulatory engagement. We've certainly engaged with folks like this, and I've talked to all three of the major core providers and some of the others. So just so you don't yell at Keltner any more than yell at Nichols. We talked to a number of them, but certainly most of our banking clients are customers of one of the big three core providers, and I found them quite open to engagement. But I hadn't really thought of it from this adoption and regulatory oversight point of view. So that's a really interesting perspective, and I'll have to go back to my team and say, hey, we need to make sure we're talking to the FIS and Fiserv and Jack Henry folks on this front as well, because
Yep,
it is. I mean, there is a huge amount of footprint that they have, and pretty much everything we do does end up integrated and going through those systems because
exactly.
it's a system of record, right? And
Yep.
that is what it is. Do you think there are other things? Do you have other advice for banks or fintechs that are kind of pushing the cutting edge for how you engage on the oversight front on this or the regulatory front? Or I'm just really curious on this point because I think it's a wave that's coming, and being on the front end of the wave, I think we'd like to figure out how do we really pave the way for others as we come down this path.
Yeah. So two other concrete suggestions, and I don't want to sound too much of a promotional cheerleader here for the ABA, but we have a huge innovation team. We have a huge innovation team that is really looking for the new the future. We're looking for the future now, and that's
Hmm
really what they're doing. Is we're trying to think out, Jeff, what's banking going to look like in 3, 4, 5, 6, and 7 years, and we're
Yeah.
trying to discover what that looks like now and move in that direction. So number one, we would, if you have an idea and you think you have a stone that you'd like to show us that shows the future of banking, we're all
Yep.
ears. Secondly, from a regulatory standpoint, the FDIC just hired, and literally like 2 months ago, a new head of innovation
hmm
strategy for Yellen and Williams. And his name is Sultan. He is and came out of a core provider,
mm
coincidentally.
Wow.
And if you are one of these emerging companies and you want to work with banks in the banking marketplace, I'd reach out to him as well and spark a dialogue also. So and that's not minimizing the role of the OCC or the Fed. They are incredibly important, but that would be someone from a regulatory standpoint that I would I would reach out to
Mhm.
as well, just given his remit, his
Yep.
newness, and Yelena McWilliams, who I know well, has really tasked him with thinking about what should the future regulatory landscape look like, given all
Yeah.
the innovation in the sector. So that would be a perfect person to have a conversation with. And then we would embrace any of your listeners for a conversation at any time around this subject.
Yeah, it's great advice. I certainly, if I think right now is a moment when the regulators are really curious. They're open. They're listening. I think the RFI on AI is a great example of saying, "Hey, like, give us some input." So it's great advice and names to connect because I think it's a moment where you've got an opportunity to really influence the future because people are trying to figure out how to deal with these changes. So here, one of my last questions for you, Rob, is there a question you wish I'd asked that I didn't ask? I mean, what did I miss that I should have asked you during this session?
No, I think you've really covered it. One other emerging issue, though,
Mm,
or actually two that I'll just quickly surface. One is our industry's role, particularly our association to our focus on DE&I. We've had a huge track record even before the murder of George Floyd. We've done a lot
mm,
in this space, not only to help the 5,000 banks with regard to their own DE&I learning paths. Some are super sophisticated on DE&I, and others are in their earlier
hmm.
stages of that learning path. And so we have a team of people that helps them establish DE&I programs. We think that's incredibly important. Similarly, we also are trying to focus on economic policies that we can promote that will help address economic inequalities that can lead to, they're not the sole cause of racial inequities, but economic inequality certainly doesn't help. So we're also thinking about from a public policy standpoint what we can do there. And then we also just try to lead from example at the ABA, and we have a group of executives that help us ensure that our own internal protocols and policies are world class in this area. So that's I'll tell you, banks. There's more to do,
Hmm.
but our industry has a great track record there. Again, more to do. I'm not spiking the football, but the large bank CEOs just the other day testified about the various efforts around DE&I at those 6 institutions, and they had quite a story to tell. It's very positive. And then the second one, very briefly, there's a big debate over the future of climate policy and how do we
Mm,
move towards a lower carbon environment. The banking sector, we're not the fossil fuels industry, so we're not in the front of
yep.
that debate driving it. We're in the back seat to some degree, but I think as we think about a transition, the financial sector will have a role to play there to help finance the transition to a lower carbon economy, and I think some proportionality will be important. When
Hmm.
you look at institutions or community banks that are in energy dependent parts of the country, we want to ensure that the transition doesn't harm the
Hmm.
banking sector along the way. So we're in the early stages of this. There's not yet full regulation, but the Fed's thinking about what should they stress test for carbon
Yeah.
going forward. So I just wanted to surface that as again an emerging issue that we're spending time talking to the legislative and regulatory
Hmm.
policymakers about, because while it's in the genesis stages, it's coming, and we want to make sure we have a seat at the table to help properly contribute to the outcomes.
Those are great topics. I usually don't dive into climate, although in my private life, that's a very common topic of conversation, particularly with my children. My oldest has banned me from wearing jeans because he says it takes 18,000 gallons of water to make a pair of jeans. So I've had to purge my closet. Now I'm short things to wear. And then I actually love the call out on DE&I and racial inequalities. I think it's a huge area where it's very near and dear to our heart because we do feel like from a credit point of view, a lot of what we're doing is there to help, remove some of the inequities that exist in the system and try and offset those to the greatest extent possible. But I also think one of the things I've had to learn coming into the banking sector is, you talk about 5,000 banks, and many of them are quite small institutions. I think often a consumer has a perspective of big institution, and many of them are quite small. And providing the resources to be able to have world-class policies around DE&I and know how to execute those is really important because many of them just aren't as well resourced as the big guys. And I think the ABA's resources to assist in that is really important to getting the industry writ large moving in a positive direction on those fronts and able to make even more progress than we already have. So I appreciate those two call outs.
Thank you, Jeff.
Well, Rob, I end this podcast every week with the same three questions. So I'm going to modify one a little bit for you because you're not a banker, and a lot of our guests are actually bankers. But my final, and I don't think I put these on the questions list you got, so you don't fully know what's coming. But my final three questions are these. Number one, what's the best piece of career advice you've ever gotten?
Oh gosh, I think it's treat your interns well. Today your intern, tomorrow your boss. So take time to help the junior most folks in your
Mm,
organization. Like seek them, seek them. The more that you can help those junior executives become seasoned, the better it is. Not only as you establish your pipeline, your upward mobility pipeline within your institution, you're just improving your institution as well. So help the next in line. I know Tim McGraw put it in the song, help the next in line, be
yeah.
humble and kind. But that really being humble and kind and helping the junior executives at your place of work pays massive dividends, not just for you personally, but for the organization at large. So that would be number one.
I, Today your intern, tomorrow your boss. That's the first time I've heard that phrase, but I like it. You are unique in your answer to that question, so that's great. The second one I always ask, what's the best piece of advice you've gotten about consumer banking or consumer lending in your career? And you've been in the banking world long enough. I think I can stick with that.
Yeah, no. Listen, it's all about trust maintenance. That's really
Mm,
when you look at the intermediation of capital, the deployment of credit, which is great. It's one of the most powerful things in the university, in my opinion. That's why I loved serving the banking sector and leading the ABA. At the centerpiece of that deployment of capital and credit intermediation is one thing: trust. And so, bank must maintain that customer and client trust. And so, and it's
mm.
fragile, and you want to maintain it. And so, it's all about trust. So, as important as the latest technology is, and all that other stuff, ultimately the banking sector relies on one thing, and it's trust and credibility. And so, that trust maintenance with your customer or client is sacred and must be treated as such.
I love that answer. I think it's totally true that as you deploy technologies, it's got to be in service of and in collaboration with how you maintain and build trust. I think it can actually be additive to that mission, but you have to keep that mission front of mind as you do that. And then my final question, and you ducked this one earlier, so I'm gonna ask you, what's a bold prediction for you? You said you couldn't make a bold prediction about regulatory guidance or outcomes, and I think that's fair. But you can pick any other area you like. But do you have a bold prediction that I could drag you back on here a year and see if you were right or not? But something you expect to see coming down the pipe in the future.
What I am interested in is the overall introduction of drones into banking. So I was talking to a banker, and they were talking about how drones will be used more widely for both commercial and residential appraisals
Mm.
and things of nature. And I'll tell you, I've not been in a ton of meetings at the ABA over the last 5.5 years around drone use, but I think that's gonna pick up, Jeff.
The drones are coming. All right, I like it. My son will be very
Good
excited.
drones. Good
The good
drones, not
drones.
scary drones, good drones.
No, see, now my 12-year-old is going to want to go into banking, Rob, because he loves the drones. So if he can do drones and banking at the same time, he's going to be very thrilled. So we've got maybe a new entrant into the career space based on that answer. But I like that. And that's a really good one.
There you
Unique in all three answers. So way to go. Uh,
go. Good,
well,
good.
thanks for joining me. I'm very much looking forward to hopefully getting together in person. I know you guys have your annual conferences that I have typically attended and have not been able to for a while, but it looks like we might be back to that in the not too distant future. So I'm looking forward to it.
We are. So we've done a year of our conferences and conventions virtually, but that's about to change. So our annual convention's in Tampa, Florida this year. It's on. It's in person.
When is it again?
And we'll expect it's in Tampa, and it is mid-October. I
All
think it's
right.
the 17th, 18th, and 19th of October. It is on. And you go to aba.com to learn all about it. And we'll have I think we're going to have a great turnout of people. Folks are ready to meet again. And of course, we'll do it in compliance with every health and safety protocol that's appropriate at the time that the
Of
local
course.
jurisdictions want us to do. But I think we're going to have a big, big, big turnout,
I think
Jeff.
there's a lot of pent up demand. I know I haven't been to conferences in 2 years, and I think starting in about August, my calendar is getting pretty full with at least one a month, and I'm looking forward to making it out to the ABA this year, as I have in years past, to be able to do it in person and meet people. So that'll be great. Well, Rob, thanks again for joining us. I really appreciate it. This was a fun conversation.
Thank you, Jeff. Yeah, listen, I really appreciate the opportunity to be with you, and I loved your final three questions. And yeah, be humble and kind. The piece of advice: one, be humble and kind. Two, maintain that sacred trust. And three, the banking and drone intersection is coming.
Banking and there you banking and drone. I like it. That's a great summary of the conversation. Thanks.
Thank you.